Maverick traders, welcome out to your currency recap. It's November 10th. Corey here with you. We're going to take you through what's happening in the markets, some interesting shifts taking place from Friday into today, a little bit of a risk on environment shift. We'll talk about setups, we'll talk about charting, and of course, we're always going to highlight crypto or FX pairs that make the most sense to trade.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so let's take a look at markets, and I would say a pretty nice shift to a risk-on environment. So what took place? Well, Friday markets, well, let's rewind back even further. Go back to last week. I do these Monday recaps, and last week we talked about it was a risk-off environment. We talked about the distribution selling, that we were likely to be hit with a little follow-through. Fast forward Tuesday, Wednesday, Thursday, and even into Friday, we're down. So much so that the SPX broke the 50-period moving average, but it was a kick save and a beauty. We rallied off of the lows on Friday, put in a hammer candle, and then today on the debt ceiling resolution, just a general optimism, the markets recovered, and it wasn't just SPX, it was Bitcoin, it was gold, it was CAD, it was Aussie, it was all of the risk on environment really continued into this morning. So as we look at price action, this is typical risk on environment. You've got strength in Aussie and Kiwi, you've got weakness in the Japanese yen by comparison. There's nothing more risk off than the Japanese yen, so that lagging makes perfect sense in this environment. Now, as we look at other asset classes, SPX, international stocks, gold, oil, all sharply higher. Crypto, a little bit of a lagging performance by comparison, but you had Bitcoin and Bitcoin Cash higher. You had some underperformance in Ethereum and Litecoin. Overall, the price action here in crypto was lackluster, let's say. So as we turn and look at the SPX chart, we have Friday's recovery. See how we were down throughout the week. Sold off on Friday pretty sharply and then recovered all the way back off of those lows. And that's not just a 50-period moving average that it saved. It really was at the trend line, this uptrend line that had been intact. We held at critical support. And then today, we gapped sharply higher. You want to pay attention to gaps. Just as we gapped down last week and continued selling, we gap up today, and you can see the continued buying that really progressed throughout the day, because where we gapped to was here. Where we finished was quite a bit higher. So still continued buying came into the markets throughout that day. Now, it's a little bit of a quiet week for economic events. We're still paying close attention to CPI and inflation numbers. We get that out of the US on Thursday. Expectations are for a little tick higher, a 0.3, which would maintain our current 3% inflation rate. Now, the Fed's stated goal is to get inflation down to 2%. Some might say, well, they've lost, that desire to really care. As long as the economy's chugging along, as long as inflation's not too high, maybe they're okay with 3%. Seems to be the case because inflation is not at 2, and yet they've been cutting rates. So that has been their expectation. That has been their long-term goal, is inflation around 2%. Anything in here inside of these lines we're less inclined to trade. So what do we trade? Well, CAD and British pound sterling look like the outperformers, the buys. What's going to take the next leg down as the short end of this? The first two make sense. Japanese yen and US dollar here are defensive, so you'd expect them to underperform as other things look good. But the Kiwi is out of pocket. The Kiwi is not acting the way it should. Everything else that's more of a risk on style of asset is more on the positive in the green area, except for Kiwi. And so when there's something that should be good for an asset, yet it can't behave properly, it's like when bad news comes out and a stock goes higher, when good news comes out and crypto trades down anyway, even though that was good news for Bitcoin or something. That's what we call a market tell. And right now, the market is telling you that there's something within the Kiwi that's just out of place. It is not acting properly. And generally speaking, when something should, I put that in quotation marks, should be going higher, yet it's falling, there's more room to the downside. So it is very interesting to me how the Kiwi is underperforming right now. Now, as we look at possible trades here in the markets, I'm going to start with British pound sterling here. You can see looks fantastic. High basing, kind of triangular pattern there. You can see the buy signal, the upward slope in the moving averages, an RSI that's consolidating but has been climbing, and anything between 50 to 70 is generally a healthier signal, right? Something that's a little stronger, a little more healthy. We see all the characteristics for pound sterling to be a good buying candidate to the upside. What else do we consider a bullish candidate? Well, how about the Canadian dollar? Similarly, this thing has been on a nice run. We broke out above resistance back here. You can see the upward slope and upward trend and buy signals and all the classic characteristics. A little bit of a pullback, but my guess is that will bounce. So CAD can be another one to consider on the upside. Well, we mentioned the Kiwi. In an environment where you're going risk on, the Kiwi is still making a series of lower highs and still making a series of lower lows. So what comes next? Probably a push to new lows. Not acting well. Notice the reading between 50 and 30, which is an unhealthy reading. It tells you that this is kind of a sickly currency, not acting as well as others. Is it a great short setup right here, right now? No, not really, because you've got a flattening out of the moving average. You're on a little bit of a buy signal, so we need to wait and make sure this is declining. If and when that happens, this will flip into a sell signal. This will start to slope downward. This will roll over, and you'll have all of the characteristics for an NZD short setup. So look at the Kiwi as a possible candidate. Now, finally, if we look at crypto, if I look at Bitcoin, it's better than the others. So if you want to trade crypto to the upside, I think it has to be Bitcoin. We're right here around 106, and you could say, well, we're in the short term, we're upward moving, upward sloping, and that's why we had it more in the bullish category than neutral or bearish. But do you trust it? There's a lot of overhead supply back here at 108, 110, 112. Remember, Bitcoin has been trending lower for really weeks now. The last couple of months have been rough for crypto in general. Certainly some rotation out of crypto, and it seems into gold, which has just been on a tear to the upside. So if you want to trade crypto, I think Bitcoin is your best bet for more upside, just not as trustworthy, I think, as it generally has been in the past. Risk on environment going forward, well, the charts certainly look good. Kiwi is lagging, CAD and British pound are leading, so we're going to try to match up relative strength, relative weakness as best we can and look for those great opportunities. Have a great week, everyone. We'll see you next time.